Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 15th of March. I'm Daniel Lam, your host for the podcast. The US CPI release last night indicated that price pressures remain elevated for the month of February. Core CPI inflation ticked up on a month-on-month basis to 0.5%, which beat expectations at 0.4%. This uptrend has been ongoing since December. The shelter index 0.8% increase month-on-month was a major contributor to the monthly move, accounting for over 70% of the headline increase. However, leading indicators of this component, such as the Zillow Rent Price Index and results from the National Multifamily Housing Council survey of apartment market conditions, foreshadow a significant bout of shelter disinflation ahead. But core services inflation excluding shelter, which Fed officials have highlighted as a good estimate of underlying inflationary pressures, also accelerated on a month-on-month basis in February. Other measures of underlying price pressures produced by the Atlantic Fed also indicate that inflation is too hot, with the 1-month and 3-month changes in core sticky CPI edging higher. So, despite the recent uncertainties in the US banking sector, this continued price pressure may lead to a potential 25 bips rate hike in the upcoming FOMC meeting. As we noted in a podcast yesterday, it would certainly be tough for the FOMC to cut rates with inflation still so far above target. This may prompt US consumers and businesses to retreat from spending and investing. In terms of our message in staying safe, besides high-quality bonds and extending the average maturities of one's portfolio, gold is also worth considering, as real yields is getting more negative. Gold rebounded sharply from the 1800 level to a high at 1914 over 4 sessions. Technically speaking, a good level to add would be around 1867. That would also be very close to 1870, which is the 61% level of the range between 1800 and 1940. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.